Here are my top 10 secrets every single supply and demand trader must implement into their trading if they want to become a profitable trader. I have been trading this trading strategy for over 10 years. I've taken thousands of trades. I've done hundreds of one-on-one reviews with each individual trader. And time again, these are things that they have to implement or else you're going to continue to lose money. In fact, if you stay till the end, I'm going to give you completely for free our last coaching call. Every Wednesday, we sit down and do a Wednesday trade review where we look at everybody's trade review, trading the supply and demand trading strategy, and I break down everything that I like and what I don't like, and I back it up with results. Okay, so I will talk more about that at the end, about where you can get that link to that meeting. So be sure to stay till the end. Appreciate if you guys like the video, subscribe, and if you have any questions, feel free to reach out to me on social media at MoneyballAustin. Let's get into it. So the first tip is going to be making sure that we are trading at quality zones. What is a quality zone? I get asked this question so many times. Let me break it down to you, because people message me all the time their trade reviews, and I keep seeing the same mistakes, and this is heavily reviewed when I do my one-on-ones, and people keep coming back to me and they're like, man, you know what, you're right. It's very important to trade at quality zones. So how do we determine a quality zone? Let me tell you this. Every single zone that you see me ever trading at is going to have these three things. It's going to have, number one, it's going to have a strong 2-to-1 imbalance. The whole concept of supply and demand is to trade large imbalances between buyers and sellers. So we want to make sure that prices move in a very strong fashion very quickly. All right, so that's the first thing. Every zone is going to have a strong 2-to-1 imbalance. The second thing that I must have is prices must remove an opposing zone and or break momentum line. So I'm going to go remove an opposing zone / BML. Every single zone is going to have at least a 2-to-1 imbalance, but it's also going to remove an opposing zone and or break momentum line. This makes a zone tradable. Okay, it's important that we make the difference between a tradable zone versus a non-tradable zone. Let me share with you an example. So here on the S&P 500, we're going to keep coming back to this chart because it's actually at a very interesting point right now. But the reason I like these supply zones up here on the 1-hour time frame, this little drop-based drop and this rally-based drop, is because why? You will notice every zone has a 2-to-1 imbalance, and it's also removed an opposing zone or broken momentum line. So in this case, you see the base up here. Notice how it has a very strong imbalance to the downside, okay? Not only that, we've also removed an opposing zone and we've broken momentum line. It's the same thing with this zone over here that you see, this drop-based drop. So let me draw this out. So both of these zones have removed an opposing zone and broken this upward momentum line. So this makes it a tradable zone. These are a lot higher quality than, say, for example, I'm going to go to the homework tab because this is something I do with all of my traders going through the program, is I want to make sure they understand each lesson, okay? And so this is why I get them to hand in homework. This is a piece of homework that I get them to hand in on lesson 1, saying hand in fresh tradable supply and demand zones. This is a supply zone that he marked out. It has a very good imbalance. Notice how it's gone 2-to-1. So that's the size of your base. Let's just call it 5. Notice how we have this big, strong move down, and it's gone at least 10. Okay. So it's got a very strong imbalance, but it has not removed an opposing zone or broke upward momentum line. Okay. So it's not very good. It's still a supply zone, but it's not a very good tradable supply zone. Imbalance. If there's anything you ever get from this video, this is it, because this is hands down the most important thing that people keep coming back to me. Every zone has a 2-to-1 imbalance, okay? And it has also broken momentum line and removed an opposing zone, okay? Every zone is going to look like this. It must when it comes to our entry time frame. We'll talk about the higher time frame in a second, but this is how we deem a quality tradable zone. Let's move on because that was a long one. So number 2, when it comes to your entry time frame zone, do not ever trade at continuation patterns. What does that mean? Well, if you are a supply and demand trader, you know exactly what that means. All right, continuation patterns are rally-based rally and drop-based drops. Reversal patterns are rally-based drops and drop-based rallies. Okay, do not trade these type of zones when it comes to your entry time frame. Okay, if you want to use them as your higher time frame, that's a completely different story. I do that all the time. But when it comes to straight up shorting or buying at a continuation pattern, do not do it. Statistically, I'm going to show you all the results so that you can actually, know what I'm saying. I'm going to break it down to you because that's my final point where we actually look at the stats. But if this right here is a drop-based drop, I would not sell it straight up and just have my stop loss sitting up there. I would not do that until people start coming to me in my one-on-one saying they are finding good results trading at these continuation patterns. It's going to remain the same. Truth is, I don't think I've ever had somebody come back to me and they actually say my continuation pattern is a lot better than my reversal pattern. Okay, it's okay to use these continuation patterns as a higher time frame, but not as a lower time frame. Okay, so instead we want to be using the drop-based rallies and the rally-based drops as our continuation pattern for our entry time frame. Okay, for our setup. Perfect. So number 3, we are only ever going to trade inside a higher time frame zone or an area of interest. All right, we need higher time frame confluence. What do I mean by that? So let me bring you through a trade review. Let me just go over here, and this was the example we were talking about today in our watch list. Okay, what do I mean? Everything starts with the higher time frame top-down analysis. Okay, we want to make sure we're trading inside a higher time frame zone. So here today, we were coming back into a higher time frame rally-based rally demand. It's also a support line. All right, I want to look for buying opportunities in here when prices return. Okay, I wouldn't go off and start selling this thing when I'm sitting inside demand or support, right? Why would you sell while you're sitting inside support? That doesn't make any sense. Okay, I know a lot of people like technical analysis, so why would you take the opposite side of something like that? So you always want to make sure you're trading with higher time frame confluence, trading inside higher time frame zones, reacting off of other chart pattern confluences, trading with the trend, whatever. Okay, so in this case, we have prices sitting inside higher time frame demand, also reacting off of support. There is definitely at one time, because here, a lot of people were looking at this as a shoulder, head and shoulders pattern, and people were selling the breakout. I was using this area for selling opportunities when prices came back into it. It didn't work. It just broke right through, pulled back, and then shot up to the upside. But now, since it shot up to the upside, I'm going to use this now as a breakout demand / support zone. Okay, but I have higher time frame confluence. And once prices came back into my zone, I then went down to our lower time frame chart, and we see this entry time frame, the confirmation, the typical, price turning from inside out. I talk immensely about this, but once again, going back to number 1, strong imbalance, removed an opposing zone, broke momentum line. All right. Not only that, notice how quickly it did it. Notice how quickly it did this. It didn't take 10 candlesticks to remove an opposing zone. It didn't take 10 candlesticks to go 2-to-1. It doesn't take 10 candlesticks to break the trend line. This all happened within 3-4 candlesticks. That's what you want. All right. If it takes 10 years, not 10 years, if it takes 10 candlesticks to remove an opposing zone, that really doesn't tell you that it's a strong zone. All right. Anyways, we're going back to the 1 there for a second. So let's continue. So number 3 is having higher time frame confluence. Number 4, clean arrivals. Now I have done a YouTube video talking about this before, so I will pop that up on the screen. I will also have it in the description, but this is a very important concept that we have noticed a massive difference between our winners and losers. So let's say, for example, let's just look at the same trade that we were just looking at. So in this case, US 500, notice how prices here on the return, prices are coming straight back into it. All right. Notice how prices is not going like this and dropping and basing. Let me show you an example actually. Okay, here. This is a trade review by Seteyam, and I grilled him for this in our meeting, that you will have access to that meeting, okay? The arrival is not good. So notice how he has this demand zone that he's buying his pullback into over here. This is where he's getting filled. But notice how it comes back here, then it bases like this, and then drops. Okay, this is a poor arrival. I don't want to see price where I have an entry set up where it goes like this, and it starts creating opposing zones before I get filled. I do not want that. All right, what I do want is I want prices to come straight back into my zone. I want a clean arrival. That offers to me profit margin. Number 5, trade at fresh zones. It's okay to trade at tested higher time frame zones, but do not trade at tested lower time frame zones. Let me share with you a trade review. So this is a trade that Alan was, once again, this is going to be a trade review that you are going to have access to in that coaching call that I'm giving to you for free so that you can see what we're trying to do in the program during our coaching calls, okay? This is a trade that I grilled him because he was basically trading a zone that was already tested. This was his demand zone that he was buying back into over here. Prices already came, tested it, and rallied back out. Why are you re-entering a trade that's already been tested on a lower time frame? Statistically, it's a freaking horrible idea. You are going to lose money. How can I say that with confidence? Because every single time I do a one-on-one review with these traders, they all come back to me and they come up with the same results. Man, I'm getting absolutely wrecking balled trading at these tested zones. Okay, so stop trading at tested zones. It drives me crazy when people do it. Okay, so you've been warned here. I mean, it's your money. You can do whatever you want. But my tip when it comes to your entry time frame zone, do not trade. Okay, let me share an example with this. So this is one of the trades that I'll have a look at. I'm scrolled out, so it's a little difficult to see the candlesticks, but you guys will get it. So this was a buy setup that I was buying back into. Okay, prices came in, filled me here, went up, went to 2-to-1 take profit, but then came back down. Why would I re-enter my trade after it's already gone in my favor, 1-to-1 or 2-to-1? A lot of the time if prices go back into my zone, it ends up failing. Okay, so why am I re-entering a trade on my entry time frame zone that's already been tested? It likely goes a lot deeper into your zone, and I would say 8 times out of 10, it ends up blowing through your zone altogether. It's okay to trade higher time frame tested zones, but do not trade entry time frame tested zones. Number 6, do not trade at zones that have taken too much time to return. What do I mean by that? Because I see people send me trade reviews all the time, and they're trading a 5-minute zone that took like a week to come back. Or you're trading a 1-hour zone that's taken 5 days to come back. So you need to keep it in perspective of the time frame that you are looking at. Okay, what do I mean? I don't like trading a 5-minute zone that has taken more than like 4 or 5 hours to come back. In fact, let me Google this here in the Discord. And this is the post, because let me actually just look at the results, because this is something that we did study in the group. And this is something that we came up with. All right. And when it really depends on the time frame that you are looking at, because obviously you probably shouldn't be trading a 5-minute zone that's taken a week to come back. It's completely irrelevant. So what you need to understand, if I'm trading a 1 to 5 minute zone, I am not taking that trade after 5 hours. It's a completely different environment that we are sitting in 5 hours later. If I'm going to be trading a 1-minute zone, I want that to come back extremely quickly, because those traders that are creating that volume during the 1-minute or 5-minute time frame, those are likely the same type of traders that you're going to be buying or selling back into during that time. All right. So if you're trading a 1-hour zone that's taken a week to come back, it's completely irrelevant by that time. Yes, it still might be a good area of interest to be looking for buys or sells at, but you wouldn't just trade it straight up. So if this was my 1 hour zone, I would not trade this after, I think mine is like 48 hours for a 1 hour zone, but I'm really not interested in trading this after it's gone all the way up here. All right. Like, I'm not interested. It's gone over 10 to 1, 15 to 1. And now you're expecting me to trade this little 1 hour zone to hold price when prices are just rapidly falling nonstop on all higher time frames, and I'm going to call the exact bottom trading a 30-minute zone like this? Hell no. It ain't going to work out well, and it's going to blow through. And this is why you have so many people messaging me. This is why I have so many people messaging me that prices just blow through my zones. So I recommend, I will show it on the screen here. Again, you need to keep it relatively in perspective of the time frame that you are using for your entry time frame. All right. So number 8, I want to talk about expectations in a trade setup. We were looking at this S&P NASDAQ. Let's say, for example, you were going to go short, because I see people all the time. You know what? It's a very good zone, like we talked about. It's a 1 hour drop-based drop. It's broken upward momentum. It's removed zone. It's a good tradable 1 hour supply zone. All right. But I will use it as a higher time frame. But what I see too many people doing is they have this crazy expectation of trying to trade this 1 hour zone, going for 10 to 1 trade, reward to risk, right? I see this all the time where they're going for like 10 to 1, 15 to 1 reward to risk. So you need to have realistic expectations. I could go on a rant about how trying to ask for a 10 to 1 short in the S&P, in the stock market, is one of the stupidest things that you could do, because the market is rigged to go up. I mean, you look at the 4 hour time frame. It's just what? In a non-stop uptrend. You look at the daily. It's just in an all-time highs non-stop, right? So why would you go off and short a very strong market on a 1 hour time frame? To me, that is absolutely mind-blowing. Okay? But I see people doing it, and I see it all the time. Even if, let's say, for example, they were trying to buy. Say there was a really good buy setup down here. I see them all the time where they flip it to a buy setup, and then they go like this and like, okay, I want 10 to 1, 15 to 1. The odds of that happening are extremely low. Now, ways that you could do that: take the trade, but get out your first take profit at 2 to 1, okay, or 3 to 1, or look to manage your stop loss after prices go 2 to 1 or 1.5 to 1. Move your stop to break even. Move your stop up to 50% risk, right? That makes sense to me, all right? Don't be right away thinking, I'm going for 15 to 1. That's extremely difficult to do. So instead, get your first take profit out at 0.5. So that's really important, is making sure that you have your expectations in line, what market you are trading, okay? So number 9 is going to be avoid trading the news. It's very simple. Just go to forexfactory.com, have a look at what the major news announcement is coming out for the day, and I recommend avoiding it altogether, especially if you are trading the lower time frames. All right, it's really important. I see so many people blowing up their accounts because they are not aware of the news. I'll say it, yet people come back to me every week and they say they lost their account or they lost a couple trades because of the news. Avoid the news altogether. That's really going to help you. And number 10 is going to be the importance of journaling, reviewing, and adapting. I told you I wanted to dig deep into these stats, and I want to share with you how important it is. I, in fact, talk about it in the call that I'm going to give you. And here are some of the things I wanted to show you. So the importance of everything that I just mentioned. So if we looked at a loss, for example, going back to number 1, talking about trade imbalances. Notice what he's doing here. He's scoring out. What's the difference between his winners and his losers? Look at this. Good imbalance versus average/poor imbalance. 50% win rate. This is going for 2 to 1 reward to risk. He's got a 50% win rate going for strong imbalances versus a 30% when he has poor imbalances. Not only that, look at his clean arrivals, guys. Like I said before, clean arrivals, poor arrivals. You remember that? Clean arrivals. 50% win rate versus 42%. That's a, 8% win-loss difference. That is big. Was trading reversal patterns right here. Reversals, now he only ever traded inside higher time frames, so you can't really take it too serious, his stats, but reversals was 48%, which is good. You look at trading inside higher time frame zones. Remember, this was one of the things I talked about. Trading inside higher time frame zones, 50% win rate versus trading outside, 37% win rate. You look at this guy's results. These are things that I do every time when traders come to me in the program. All right, it's much different than me just sitting here listing it off versus if you actually come up with these results and you do the testing. Completely different. That's why people come to me, is they learn how to properly implement it. All right. Trend. We talked about the importance of understanding trend. All right. Understanding strong and weak markets. Look at this. When he's trading with the trend or in a sideways market, he's trading with a 70% win rate versus 30%. Okay. Here again, patterns, drop-based rallies, rally-based drops versus continuation patterns. Okay. Now he only took one setup, so you can't really take the continuation patterns too serious. But I harp on these guys not to do it, so that's why they don't do it. But look, 68% win rate. Okay. Entry time frame, quality. Look, listen. Quality setup. What is he deeming a quality? A quality setup is when you have a pivot point zone removed, clean momentum break, and a quality zone created, like a strong imbalance. Look, quality, 60%. All right. When he doesn't have it, which he's deeming poor, only if he has one of these things, it's a 22% win rate. Guys, I'm telling you, everything that I was listing in this video is the difference of you making money and not making money. Okay? These are things that you have to implement as a trader if you want to make money at this game. So guys, these were all of the things that we just talked about, 1 through 10. I'll scroll in so that you can see. I did mention that there was going to be a bonus for you guys. That bonus recording, the coaching call that we have, is going to be in the description of this video. It's an hour and a half long, talking about trade reviews, talking about everything we just talked about, but so much more into detail. This is what I try to do. I build consistently profitable traders in 90 days or less. All right, that is the whole goal by working with me directly in the program. You guys can check that out, moneyballtrading.com. That will also be in the link below for you guys to join and check out. So I'd love to have you guys part of the program where you have full access to the course, Trading the Supply and Demand Trading Strategy. You have that direct one-on-one coaching with me where I look at homework and we talk about these weekly coaching calls every Sunday and Wednesday, going over the markets and trade review, as well as every single day talking in the Discord, going over watch list ideas and talking trading. Okay, so that coaching call will be in the description below. I appreciate if you guys like the video, subscribe, and if you would like to watch my trading strategy in 10 minutes or less, check out the video above right now. Cheers. Bye-bye.